Let's take a look now at cash flow, because this really is the crux of every investment. The starting point is how much money do they want to raise, and this may be both for a rewards-based crowdfund or indeed an equity-based crowdfund. How much money are they actually trying to raise? You'll need to understand what they need to apply that money to, because that'll be very relevant to how the cash is used. But what you really want to know is how desperate they are for the money. Now, in a rewards-based crowdfund, you normally expect that they can't produce the prototypes into products without the funding. That's fine, and you get that. In an equity-based crowdfunding, however, you are facing the situation where the company is more established, it has a burn, and it needs to raise the capital to keep going. So what you need to really be asking yourself is, does the company need the money now? Does it need it in a month or two? Or does it need it in maybe 6 months and they're really aiming ahead? The rule of thumb for any fundraise is that you really should be trying to raise enough money for 18 months, and you should really start raising money when you've got at least 6 months money left, because it's probably going to take that long to raise the next batch of money. And that is called runway. How much cash have they got in the bank to actually last them for how long? And if you understand the desperation, then you'll get some idea of the state of the company and the likely success of the crowdfund. The calculation that you need to understand is the cash burn. How much money is this company going through on a monthly basis? And you'd quite like to know what it's spending it on as well. At some point, the company will become cash positive, and you'd very much like to know when they're forecasting to do that, because when you understand how much money they're raising and where they're going to be cash positive and what the burn is, you'll understand whether they're raising enough money to get them to cash positive, or whether there's going to have to be a subsequent cash raise in order to get them to that point, or even a third one. So understanding these things, understanding how the cash flows are working, is absolutely critical. And of course, you need to look at the forecasts for that, and you need to take a judgment yourself on whether you think these forecasts are realistic. So cash is king. Cash flow is at the heart of this, and you really need to understand how it's all going to work.